Well, good morning, everyone. Welcome to our Wednesday morning demo session for our DTS trading room. Bear with me just a moment here as I get you my monitor. For those of you who are new in the room this morning, welcome. What we're going to do for the next hour and a half or so is show you the DTS system, show you how it works, hopefully answer your questions. So what we're looking at, or what you're looking at, is the DTS system. The DTS system stands for Diversified Trading System. And it's diversified because we're looking at the market from three different points of view. Here on the top left, we have the Hawk Scalper. Top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right, this is the latest addition to the Indicator Warehouse family of trading tools. It's called the Raptor, and the Raptor is actually a blend of the other three tools. It actually incorporates the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into one tool. Regardless of the tool that you're using, however, they all generate a signal the same way. When the signal parameters are first starting to be met, we get a warning dot. Then when all the signal parameters are met, we get a triangle and a hash mark. When we get the triangle and hash mark, that tells us that everything as far as the trading tool is concerned is in place to take a trade, and now it's decision time. Now it's time to decide whether we're going to try to take this trade or not. Now, normally what we're looking for is we're looking for everything to become in sync. You can see we've got a warning dot here on our Falcon Swing Trader, and it looks as though we might get an opportunity to sell. So I can actually anticipate an entry here if I choose. Let's say I'm going to cover the trade above the high. All right, the signal did not complete. We did not get our triangle and hash mark, so I can scrub that order. All right, here we come back. Now we've got the triangle hash mark. We'll take it below here now. And I'm going to talk about this tool here in a moment as well. But like I said, what we're looking for with the trade manager or with the swing trader or any of the tools is just for everything to come into sync. So we've got a red trend line, we've got red bars, we generate a sell signal, and that gives us an opportunity to get into a trade. That tells us that all the parameters are ready, and ideally I would have liked to have entered here on the hash mark, but you can see the market jumped a little bit on me, and we're going to let this trade just sort itself out here for a moment. Why don't we go here to the Hawk Scalper, and you're going to see that the Hawk Scalper generates a signal the same way. We're getting our warning dot. When the signal parameters are met, we get a triangle and hash mark, and that tells us that we had a tradable signal. And you can see that we've since traded down and hit our high probability profit target. So very simple, just looking for those warning dots and hash marks, looking for everything to come into sync. In this case, everything was all red here, and that would be a signal that we would like to take. Versus, say, some of these signals where you see all these yellow bars. These are signals that we tend to avoid. The Eagle Trend Trader works much the same way. Once again, you get a warning dot when the signal parameters are starting to be met. Then when everything is in place, you get a triangle and a hash mark. With the eagle, you're going to see that a lot of times they tend to build on the same bar. It's just the way that the market is flowing, the way the signals come together. And then we generate a signal, and now it's decision time for us. And here too, we'd like to see everything in sync. There are a couple exceptions, which I'll touch on. But for the most part, a solid signal occurs when you have green bars, a green filter, and a bullish band. You see this gray band here behind the price action. This gives us our directionality as far as the trend is concerned. So here we have a bearish band. We have what we call the soft edge below the hard edge, and we generate a sell signal. We had some nice follow through on that. Red bars, red sell signal, red filter. We come back, the band changes direction. Now we generate a green buy signal, green filter, and that one too had some very nice follow through to it. So the tools have been designed to be as easy as possible to use. And each of the tools also has an audio alert with it. So this enables you to watch multiple markets at one time. Like right now, I just heard the scalp audio alert, and the charts that we're looking at on this particular monitor are the NASDAQ charts. But I'm also watching the euro, the 6E, and crude oil. So when I hear a scalp alert, I really just need to take a look at my NASDAQ chart, my euro hawk chart, and my crude oil chart. And right away I can see that I've got warning dots building here in the NASDAQ. So that's where the scalp alert is coming from. The Raptor, like I said, is a little bit of a blend of everything. It incorporates the principles behind the Falcon, as well as the Hawk and the Eagle. You're going to notice we have this band on here, same band that we have on the Eagle Trend Trader. The whole Eagle Trend Trader has been programmed into this filter here at the bottom. And for the most part, it works exactly the same way. We get our warning dots. We get our triangle and hash marks telling us that the trade is complete, and we're looking for confluence. We're looking for, in this case, blue bars, a bullish band, a blue filter, and you can see we had some fairly decent follow through on that trade. Here's a move to the downside. We get the warning dots, we get the triangle and hash mark, a bearish band, a red filter. That would have been a pretty good sell signal for us to take. Now the Raptor is not going to be your fast tool because it incorporates all three birds into one. It's going to sacrifice quantity of trades for quality of trades. That's the way the Raptor has been designed, so that when you get a Raptor signal, you can take it with a great deal of confidence. But if you're looking for more sensitivity, then the DTS birds give you a little bit more control over the current market condition. So for instance, on a day like we saw just a couple of days ago, where the market was very choppy, we weren't getting very many Eagle or Raptor trades. We were concentrating mostly on our Hawk scalper and getting in and out at that. So there is a little bit of a trade-off with the tools that way. Now, last but not least, we have this fantastic tool right here. This is our trade manager. And the trade manager no word of a lie, is probably the most important trading tool that you can own. This tool right here enables you to trade just like Wall Street. It does all your, trade management for you. It prevents you from overextending yourself. It prevents you from losing too much money and not earning enough money. Most people don't realize that in order to be a successful trader, you not only have to minimize your losses, but you also have to maximize your gains, so that when you do have a winning trade, you've earned as much as possible. So how does that work? Well, this little feature right down here, this risk percent button, prevents you from risking more than you can afford. Currently, I have it set at 2% of my account. And what that means is that no matter how I structure the trade, I'm only going to risk 2% of my trading capital. So let's go back to this signal here that we were looking at. This is what we refer to on the Hawk as a first micro-macro crossover signal. And it's a very high probability signal. It's pretty easy to spot. It occurs when the micro line, that's this thin one, crosses over the macro line. Everything comes into sync, which means we have red trend lines, red bars, red signal, red filter. And that tells us this is a high probability signal. This is a signal that we probably want to take advantage of. Now, the problem most people have, the way most people trade, is they'll say, well, I'm going to be very conservative. I'm just going to go in with a one lot. I'm going to just trade a onesie, and I'm going to make the trade really tight. So I'm going to enter here on this hash mark. I'm just going to give it one bar, and actually most people are very concerned about getting a 2-to-1 or 3-to-1 risk-reward ratio, so they're going to go like this. They're going to say, well, I know I'm risking about $50 here, so I have to get at least twice my money back if this doesn't work out. This is what most people do. So the trade progresses, and in this case, hooray, you hit your trade, you hit your target, you made your money. So you've made a little over $100, which is great, don't get me wrong. But how many times have you taken that trade and you've framed the signal a little bit too tight, or you didn't allow the market enough wiggle room before hitting your profit objective? The market, I can't find a good example because unfortunately DTS, usually when it signals, it signals off momentum, so the market doesn't hesitate too often. But all right, let's take this one right here. We have reasons for not taking this signal where it is, but I'm not going to get into that right now. I'm just using this to make a point. So let's say we set up our trade like that, and we want to get our 2-to-1 reward to risk ratio. So we think we're being really smart because, we've got the trade covered really tight. The market brings us in, and everything's looking good, and oh no, we're taking some heat, and all of a sudden we get stopped out. And then the market reverses and goes to our profit target without us. Oops, sorry. Hit the wrong button. How many times has that happened to you? Well, if you're like me, probably more often than you would care to admit. So what should you do? Well, ideally, you should risk your stop a little bit deeper, right? But now, if you're trying to maintain a 2-to-1 or 3-to-1 reward risk ratio, you're trying to risk it way up here. And you're thinking, well, okay, that's still feasible. And let's see, did this actually work out? Yep, you would have hit your profit objective, so hooray for you. And you would have been able to ride out the swing. But how many of you are comfortable doing that? Probably not that many. What you should be doing is you should be controlling your risk. If you didn't notice, when we ran our trade like this, we had $55 at risk. When we run our trade like this, we have $150 at risk. Approximately, right? How do the pros trade though? The pros don't trade onesie-twosies like that. What the pros will do is they will maintain their risk amount. In this case, I have it set at 2%, which is a pretty good rule of thumb to follow. And watch what happens. If I run my stop really close like we did before, I have $440 at risk. Now, don't let the numbers scare you. It's going to be different for your account. This is based on my account. This is 2% of my account. But I want you to get a handle on the principle. Okay, so watch what's going on here. We're trading $440 in risk. What happens if I trade it down to here? Oh, look, I've got $420 at risk, essentially the same amount. What if I run my stop way down here below the swing low? Oh, I went a little bit too far. Okay. I'm just getting one contract here. I'm trying to get, let's see if I can get it up. There we go. If I run the stop way down here, I still have $440 at risk. So notice, irrespective of where I place my stop, my risk amount never changes. I'm going to let that sink in for a second because this is a very important concept to get a handle on. My risk amount never changes no matter where I place my stop loss. What does change is the quantity that I trade. So whereas most people go in and they just trade a single all the time, and they try to set up a 2-to-1 or 3-to-1 reward to risk ratio and hope that the market actually goes that far, what professional traders tend to do is they tend to maintain their risk exposure, so their risk remains constant, and instead they try to focus on high probability trades or high probability targets. And they will adjust their position size in order to maintain this risk amount. Well, the beauty of this tool is that it does it all automatically for you. And it not only does that, but it allows you to preset profit targets also. So let's say I'm going to take a trade and I'm going to take half on target. I'm going to leave half on as a runner. My first target is going to be $50 per contract, which is our high probability profit target. And now I don't have to jam my stops in here ultra tight, hoping that the market will accelerate as soon as it finds my order. Trying to trade a single, and you know how difficult it is to manage a single contract. I can actually set up my trade properly. You know, I can look at swing lows and say, yeah, okay, that's a swing low. It looks like it's old resistance, and now that's new support. Yeah, that looks like a good spot to hide my stop. Notice I automatically get my first profit target set, and I have a runner in also. So if this trade goes in my favor, I've got a little bit of breathing room here. I hit my first profit target, and I still have an opportunity to take advantage of the market should it prove to go any further. Now, a lot of times, for a trader like me, I like to be all in, all out. I just like to take the profit. I like to go for those high probability targets. I don't need to take the heat. So I'll set up like this. Notice my position size is set at 3 contracts. I'm risking an amount I can afford to lose. I go in, and a few minutes later, I hit my profit target, and I banked my $150 because I'm trading for a $50 target, 3 contracts, $150. Now, in case that doesn't seem like a lot of money to you, if I do this 3 times a day, 4 times a day, maybe even 5 times a day, and there's been plenty of sessions that we have watched where we get very high probability signals 5 times a day. And if you're going in and out for about $150, $200 each time, it doesn't take very long for you to earn, say, $500, $600, maybe even $1,000 just off of this one tool. Here, I'm going to show you, here's a good example why I like high probability profit targets. Here is another first micro-macro cross to the downside. All right. If you're the traditional trader, you're probably looking at this and saying, oh, okay, there's support here. The market's not going to go any lower. I can't, if I'm going to do a 2-to-1 trade or even a 3-to-1 trade, I'm going to have to set it up like this. I'm going to have to do like this and this, and that way I can get a 2-to-1 trade. Okay, what are the chances that the market's going to engage you and take off without looking back at least a little bit and stopping you out? Sure, it's only $25, but what are the odds? You know, you're making this stop insanely tight. Okay, what should you do? Let's set our risk amount. If this trade does not look very favorable to you, how about we dial down the risk amount? We'll only risk 1%. It's a first micro-macro cross signal. I know it's a high probability signal. Actually, the highest probability signal here as far as the hawk is concerned. And what if I choose maybe to risk it above this little swing high that we see here? Maybe that will offer us some support. All right, so we're in. This is only 1% of my account, mind you. $180. Okay. And I'm all in, all out, or I'm choosing to go all in, all out. I could set profit targets. I could leave a runner in play, but just for the sake of example, I can go in with 2 contracts. I can hit my high probability target before I encounter these lows, right? But if you're the regular type trader where you're looking for a 2-to-1 risk reward, you're probably going to pass on this trade because the very best you can do is like this, and you're probably down here somewhere, or even a little deeper. So you're probably not going to see any potential on a trade like this. You're going to look at this trade, you're going to say, yeah, the market's going to bounce. I can't hit my profit target. I'm going to pass on this trade, right? Let's be honest now. I know because I work with people like you, and I know you're passing on this trade. And yet, what happens? You've passed on this trade, and all of a sudden the bottom falls out. Whereas, if you're trading the probabilities and you're controlling your risk, there would be no reason for you not to take this trade. Oops, let's go with our target. I've controlled my risk. I've dialed down my risk. This is only 1%. Right? It's only 1% of my trading capital. If I can't afford 1% of my capital on a high probability signal, you know, what am I doing? And you can see we come down, hit our high probability signal, and now I really don't care whether the market reacts or doesn't react. I've got my money, and I can wait for the next signal. Here's another high probability signal. And once again, this is where a lot of traders would say, yeah, okay, it's come down, it's broken support, old support is acting as new resistance, I'll take this trade. And so they're looking at taking this trade, and they might choose to enter here and exit above here, and they've got to get their 2-to-1 target at least. Oops. And so they're looking, down here somewhere, and what does the market do? Brings you in, and all of a sudden, or maybe not all of a sudden, but eventually stops you out. Now, yes, there were opportunities here for you to adjust your stops somewhat. But if we're going with our high probability targets, and once again, if this does not look like a favorable position to you, we'll dial down our risk. We can risk it up there. Market comes down, hits our high probability target, and now I really don't care. So whereas most traders, most average traders, passed on this trade here because it didn't look very promising, took this trade here because it did look promising and had it fail, I've already had 2 winning trades, right? And at no time for either of those trades did I risk more than I could afford to lose. In fact, I've risked even less. I only risked 1% of my trading capital. If I had, just stayed with my regular 2%, this trade here would have been a 250 winner, and this trade down here would have been another 250 winner. So I've made $500 already, just in the span of about a half an hour. This, and I'm not saying that to boast, I'm trying to drive home the point how important money management is to your trading success. Ultra, ultra important. I always say there's three legs to the trading stool. You need a good entry signal. You need to have trade management, which we're going to talk about in a moment, and you need to have money management. Most people are obsessed with the entry signal, and you do need a good entry signal. There's no question. We spent a lot of time refining these tools to get good, clear, high-quality entry signals. But you also need trade management, and a lot of people incorporate that into their trading. But last but not least, certainly not least, you need money management. And Cullen asks a great question here. And Dustin, I see your question too. I'm going to get to it in a second. Cullen asks, but your risk reward is inverted. Now, I know folks who have been in the room already are saying, oh no, here he goes. Because they know my point of view of risk-reward ratios is not a favorable one. Risk-reward ratios are one of these things that look great on paper, but don't work in real life. Right? Just like we were looking at over here just a second ago. I think this was the signal. If not, it doesn't matter. It's close enough. Where we're looking at a signal, and you might see this as a bear flag, right? So you choose to maybe take this trade. Okay. If you're like most people, you're going to try to keep this really tight. Oops. Come on. Did I break it? Hold on 1 second. I changed something midstream there. It didn't like that. I need to refresh it. See if that doesn't fix it. doesn't like when you change things right in the middle of a setup. Okay, so what most people will do is they'll try to get at least a 2-to-1. So let's see, can we get a 2-to-1 there? Okay, close enough. It is a 2-to-1. So they may choose to take this trade, right? And what will end up happening is they'll take this trade and the market won't hit the profit target, and instead they'll end up with a loss. And yet it looked like a favorable trade, didn't it? It looked like a trade that you should take. It had twice the reward as it did the risk. Compare that with with another trade. Let's say we're looking at, I think it was this one right here that we were looking at. Would you take this trade? Well, you're probably going to say yes because you've seen the results. But if this were happening real time, chances are, and don't lie to me, chances are you would not take this trade. Why? Well, because even if you make it really, really tight, you can't get a 2-to-1 trade before you encounter this support down here. And this looks like strong support, doesn't it? After all, it stopped the market on this rather substantial decline all the way from down here. I would respect that support. And then here it comes, and all of a sudden you're generating a sell signal. You get your warning dot, you get your triangle and hash mark. Now you need to make a decision. And if you're looking at 2-to-1 or 3-to-1 reward risk ratios, you're going to say, no, can't take that one because I can't get enough reward relative to my risk. And instead, what ends up happening is you're left on the sidelines and the market takes off like that. The mistake, too, that most people will make is they'll look at the reward side and then they're going to try to fashion a trade to fit that reward. So they're going to go like this and they're going to go like this and they're going to say, okay, based on the reward I have, this is the trade I can take. This gives me a 2-to-1. And what ends up happening is they get brought in and they get stopped out immediately because their stops are too tight. Like I said, risk reward is one of these things that works great on paper. Fantastic on paper, but it does not transfer into real life. What works in real life are probabilities. What is the probability that this signal will work? Never mind that there's support down here. What is the probability this signal will work? Well, I know that this is my hawk scalper. I know this is a first micro-macro cross signal. I know that is a high probability signal. I know from tracking this signal that this signal has well over an 80% win ratio. In fact, it's probably pushing near 90%. Those of you who have seen me in the room know that I will almost take these signals without exception. And I could go through the chart and I could highlight all the first micro-macro cross signals and you could see for yourself how well they work. They almost always hit their high probability profit targets. That one's... These are all first micro-macro cross signals, and you can see, how well they actually work. This one here gave us a little bit of heat, but eventually hit its profit objective also. This one up here doesn't look like much, but notice if I roll over here, I bet you I hit my high probability target before it changed direction. Oops, wrong tool. Or that one's looking a little cozy. No, it did. It hit my high probability target and then started to reverse. So it's the type of, I'm looking now at the probability that the signal is going to work out. So I'm no longer concerned with risk-reward ratios, which, like I say, don't work anyways. Following risk-reward ratios will make you pass on a trade like this, and it will make you take a trade like this, which looks like it has a favorable risk-reward to it. Right? You can cover it here. You can get out here before you hit the lows. Well, maybe not quite. Make it a little bit tighter still. Okay, there's a 2-to-1. We get out there before we hit the lows, and the market flounders and stops you out. So professional traders, when they refer to risk-reward ratios, they usually refer to them in hindsight, not in real time. And unfortunately, risk-reward ratios are one of these things that work just often enough that people think they really work. They're like Fibonacci levels. Fibonacci retracements work just enough that people think they work. And I'm not knocking fib levels. If you like watching fib levels, great. If it helps you make a trading decision, fantastic. But don't think for a moment that just because the market went from here to here, it has to retrace back to here, to the 50%, or the 62, or the 38, or the 76. The market does not have to do anything, right? We're dealing with the future. So you should not pay attention to risk-reward ratios. Instead, what you should do is you should look at the probability of your signal. This is what we refer to as a macro pullback signal. And you should work on a high probability profit target. So here I can set up my trade. Look, I can set an appropriate amount of risk. This is 2% of my account. For you, it might be more, it might be less. I can set an adequate stop. Look at this. What if I chose to run my stop right up here? What do you think the odds are? We're talking probabilities now. What do you think the odds are that I will hit my profit target before I hit my stop loss? Probably pretty good, right? What do you think the odds are if I make the trade ultra tight? What do you think the odds are if I set up the trade like this? Probably a lot less. Notice my risk amount doesn't change, or doesn't change substantially. What changes significantly is my position size. So the point I'm trying to make for you is that you should try to give the trade the best chance of success. Concentrate on your high probability signals. Set a reasonable stop loss. Go with a high probability profit target. Don't risk more than you can afford to lose. Correctly capitalize your trade so that when you do win, you earn an appropriate amount of money. Or you maximize your earnings, I should say. I'm going to share a real quick story with you. Those of you who have joined me before have heard me refer to a fellow named Derek. Derek used to be a onesie-twosie type trader. He'd win a little, he'd lose a little. It wasn't until he started with DTS and he started using Trade Manager and he started correctly capitalizing his positions that he started making money. When he was trading, one or two contracts here and there, he made a little, he lost a little. He never really got any traction. But when he started trading position size, all of a sudden he started making money because he never lost more than he could afford, but he always maximized his earnings. That's the other side of the coin. This is the side of the coin that people drop. If you're in here with a onesie, okay, you may have made 50 bucks. I made 250. Okay, if the trade goes against us, you lost $25. I lost 450. You certainly lost a lot less than I did. But the point is, I can afford this loss. And if this doesn't look comfortable to me, then I'll dial down the risk. I'll make it 1% of my account. And like I said, this will be different for you. So you made $50, I made $100. I'm making twice as much money as what you are. So if every single trade you take, I double your earnings, you know, it just intuitively, it just makes sense. I am going to earn more money than you are. And this is how Wall Street does it. You don't think for a moment that the guys on Wall Street are gamblers. Don't think for a moment that they are interested in risking any more than they can afford. They are masters at controlling their risk. Okay, I've kind of beat that one up a little bit. I won't get into as much as I usually do, but this is an ultra important concept to wrap your head around. The last feature of the Trade Manager here is these little blue dots that you see. These are your stop strategies. So this enables you to actually step away from the trade and go look elsewhere for other opportunities, because Trade Manager will automatically manage your trade according to whatever stop strategy you have selected. And we have 16 different stop strategies to choose from. All of them are fully customizable. And with the click of a mouse, you can change your strategy. You can make it more aggressive, less aggressive, whatever you choose. And if you want to see how one strategy compares to the other, you can turn on your preview button and you can compare. So you can see how the ATR strategy would run relative to the percentage strategy. So if that's to your liking, you can click accept and away it goes. Now, like I said, the nice feature here with the Trade Manager is that it will automatically manage your trade for you. Now, we're not getting a whole lot of movement right now. You can see all these yellow bars through here. This is our hawk. This is telling me the market is very choppy right now. See how our filter is breaking up a lot? Again, that's telling me we're in a choppy market. So we'll wait and see if I can get a signal somewhere, and hopefully I can show you how the Trade Manager will handle your open position. And while I'm waiting for that, Dustin was asking about the Day Ranger. The Day Ranger is this tool that you see up here in the top left corner. This is an add-on, by the way. The Day Ranger you can put on any chart, regardless of whether it is DTS or whether it's a 5-minute chart, whatever the case may be. I'll get you the link for this information here in a moment so that you guys can find it yourselves. Let me just do that while I think of it. Okay, there's a link you can follow which will get you some more information about some of these indicators. The Day Ranger is located under the Premium Indicator section. And what it does is it tracks the average range of the market. So it gives you a feel for how the market is performing relative to how it has been performing. So currently, this is today's range. We're trading at 114 ticks. Yesterday we traded 510, crazy day yesterday. The average 5-day range is 252. The average 10-day range is 240. The average 30-day range is 233. So that tells me that the market is becoming a little bit more volatile. It is increasing ever so slightly, the averages. Or it's been more volatile of late. The way you can use this several ways. When the market is starting to get close to its average range, you might think that the market has exhausted itself for the day. Therefore, you may choose to run a tighter profit target maybe, or maybe avoid the trading altogether if it looks like the market has already maxed out its trading range. The other thing you can do is you can look at this and you can say, okay, the average range is about, say, 250 for easy math. And you may choose that maybe I want to take a fifth of that as a profit target. So that will give you a profit target of 50 ticks. So when you're generating a signal that you want to take and you think it might turn into a runner, then maybe you would want to have a 50-tick target, and that would be your objective for the day. Here's a first micro macro cross I'm going to try to hop on. Oh, it's going away. I was going to show you the trade manager. Here, we'll just sell it. Okay, notice that our stop loss is right here where this blue dot is. Oh, see how the trade manager is rolling the stops down as the market moves in our favor? See, it does it all for you automatically. And you also have this handy-dandy little break-even button where you can force the trade to break even. Currently it's break-even +1. So you can take the trade to break even if you want. And should this market continue lower from here, which I suspect it might, we'll continue to see the trade manager roll our stops. Also with the day ranger, you can also use it to set your stop loss objectives. Same thing, let's say you want to risk 20 or 10% of the daily range as a stop loss. So if you know the average range is 250 ticks, then maybe you want to run a 25-tick stop. That will give you 10% of the average daily range. So very helpful tool in that respect for setting profit objectives, for setting stop losses, for just getting a feel of how the market is performing today relative to how it has been performing. Great question here from Jim. Jim says, does the trade manager work on naked charts or just with your strategies? It will work on any chart. It is a standalone. You can purchase it separately. It is probably the single most important piece of software available on the market today, and I'm not just saying that. I have not seen anything even come close to what Trade Manager can do. This was, to Adam's credit, this was Adam's brainchild, and it is a phenomenal piece of software. It also has this little feature here where you can, I find it distracting to see the dollar amounts tick by, so I usually turn them off, but you can set it at dollar amounts or a tick value or percentage of your account. No, very, very important tool. The Raptor has, I'm featuring here on the Raptor a slightly different version of the Trade Manager. This one is called the Trailblazer. And you'll see that it's almost the same, except it does not have the risk component to it. What we've done with the Raptor is we've kind of stripped it down a little bit to give you a little bit more automation on the entry side. So with the Raptor, what you do is you preset your quantities. So this means that you're going to have a rough idea of what your risk exposure should be. And you can preset your profit targets. So let's say I want to take a trade where I'm going to have 2 contracts and I'm going to have profit target at 20 ticks for the first one, and I'm going to have a 0 profit target for the second one. In other words, that's going to be a runner. And we'll just buy the market here so that you can see how this works. So we'll buy, and notice that Trade Manager will automatically default to wherever your stop loss is, given your stop strategy. So if I ran, say, a percentage stop strategy, and I like this one better, if I click accept, oh, sorry, flipped it the wrong side. Let's do that again. Okay, let's find one that's on the other side. Let's see where our parabolics. Okay, they're not cooperating with me right now. Okay, let's say I'm liking the way the super trend is looking a little bit better, so I choose to click super trend, and it's automatically going to take the super trend stop. But the point I'm trying to make is that your risk is no longer constant. Your risk is changing relative to the stop strategy you chose. So if I go, say, now with parabolics, it's going to change to be a little bit more aggressive. So you need to have a rough idea what your position size should be relative to where you normally place your stops. And after that, it's only a one-click system. So if you're using the Trailblazer, you would right-click on your chart and you would enter your order. Now these orders are live the moment you put them on the chart, so I tend to place them away from where I want to enter, and then I tend to roll them in. And once these orders are active, and this is true for Trade Manager also, you can grab them and roll them wherever you want. So if you want to adjust your profit target somewhat, you can certainly do that. Or if you want to make it tighter, you can do that as well. And same thing with your stop. If you want to leave your stop down here, you leave it down here. You temporarily disable your stop strategy, and your stop will stay right here. So, like I said, they're fully customizable. Oh, we're actually getting a sell signal here on the Raptor now, coming out of the Raptor band. And you see we got our warning dot, we got the audio alert, we have the triangle and hash marks telling us that this is a sell signal. So if I wanted to sell the Raptor, I would enter my order, roll it in to where I want it to be. I don't want this stop strategy. Let's go with perhaps the percentage for now until I find, where's my ATR? Nope, ATR is below there. And like I say, everything is customizable. All right, so the order did not engage. So cancel that and wait for the next signal. So the Trailblazer, very similar to the Trade Manager. The big difference, of course, is it does not have the risk management component. So you're going to have to do that on your own. To my way of thinking, though, that risk management component is a very important feature. Bob is asking, will you go over trading off support and resistance? Sure. Now for support and resistance areas, I'll go here to my Falcon chart. On the Falcon, I have the Ultimate Support and Resistance Suite. This is an assortment of support and resistance areas, which are forecast for today. These are not Fibonacci retracements. These are not pivot points. These, I'm actually quite proud of these. These took a long time to develop, and there's a considerable amount of math behind these, but they seem to work fairly well at forecasting where the market should find support and resistance. And you can see the way they're organized is there's 21 lines in all. This gold line here just tells you you're in the middle of the assortment, so this is the median line. And then below the median line we have primary support, the first blue line, and above we have primary resistance, which is the first blue line. Once we get through those, then we encounter the pink lines and the green lines, which will be secondary support and resistance. Now you can see we're more or less stuck since the market opened between the primary support, hit it right on the number here, and primary resistance, which we tagged right on the number there, right out of the open. The market does have a slightly bearish bias, however, because we're below the median line. Some people like to use the support and resistance suite as profit objectives. So here's a buy signal on the Falcon. I know Omar, who is the Forex guy who uses DTS, would tend to use the support and resistance lines. He would cover below the primary support here, and he would use the median line or somewhere near the median line as a profit objective. That's how he liked to trade. Or here's a good example to the downside. Here's a sell signal. This is what we call our trend change signal on the Falcon. So he would cover above the median line and he would use the primary support as a profit target. That's how Omar liked to use them. A lot of times what I'll do is I will use them as confirmation tools. So if I see the price come down here, hit the primary support, and then all of a sudden generate a buy signal, which it does right here, this gives me a little greater confidence to take this buy signal because of the fact we're bouncing off of primary support. And same thing up here, when we're bouncing off of the median line, I generate a sell signal. That gives me a little bit more confidence taking the sell signal. Some people like to get a little bit more aggressive with them. They'll trade the first signal off of a bounce. I'm not quite that aggressive with it, but you know, it's an option. If we ever get through the lines, you can look for a retest. So in other words, this is a common support and resistance phenomenon where if we break through the low, say we break through the primary support, we can expect the market to retest it. So we would be on the lookout for this right here and a subsequent failure. If we got the subsequent failure and a signal to sell, that would give me a lot more confidence to sell because now I know that the primary support is holding. I also know that if it breaks here, well, the market seems a little sluggish today, but it will move at least one zone. Very often, if it breaks primary support, it will actually move two zones. So we'll see whether the market can even get down here, say to 41.60 today. That would be a pretty substantial move. Yeah, Colin says it looks like a pretty safe buy at support with a small stop. I know the type of trader you are, Colin. You're I'm not saying this in a bad way, but Colin is the kind of guy, and there's a lot of people like this who will see the market coming into support, and they'll choose to enter with a limit order. Right? They'll go in with a limit, and they'll expect the support to hold. It held back here, right? It held back here. Come on, there we go. So they would expect it to hold here also. So in order to accommodate that, what they would do is they would go in with a buy order, and they would run a stop just below here. Now, it's great when it works because you can get in and out. You can get into a trade like this quite literally here on the NASDAQ for maybe 10 bucks, 20 maybe even. So, you know, the risk amount is minimal, and if it comes down and tags, you end up buying the low, and it goes up for a little bit. It doesn't take long to make this a worthwhile investment, right? For me personally, I am more the type of trader where I try not to predict what the market will do next. Rather, I try to react to what it is doing. And I'm not faulting anybody's trading strategies. There's 1,000 ways to skin the trading cat. But for me, what works best for me, what makes the most sense for me, is to react to what the market is doing. So when the market comes down, hits the support area, or gets close to the support area, oh, well, here we are again. We're right back to the support area. And we're generating a sell signal. I want to react to this. Does this look like a high probability signal to me? Well, yes, it does, because we keep hitting this support area. Does it mean we're going to break this time? No, I don't know if we're going to break or not. You know, is this the type of trade that maybe I want to dial down my risk amount on? Yeah, okay, maybe I'll do that. Maybe I'll enter below the primary support. Maybe I'll offer up a couple of ticks and enter below here, right? So I tend to react to what the market is doing rather than try to predict what it's doing. And there's pros and cons for each. I'm certainly not saying one is better than the other, but I think as a trader you have to go with what works best for you. And for me, I prefer to react rather than try to predict. I find that a little bit easier. Yeah, Colin says in another spot, I'd buy the bounce at support. So, like I said, I'm not knocking anybody's trading methodology. There are literally hundreds, if not thousands, of ways to trade. But for me, I prefer to interpret what the market is doing. So how would I interpret this, going back to support and resistance? We're bouncing off the primary support, so I expect it to bounce. So what happens instead? Well, the market comes down, it bounces, okay, fantastic. Oh, wait a minute, here come the sellers again. Sellers force the market down. Okay, that's all right, here come the buyers. But wait a minute, what happens? Here come the sellers. That's why this was a better sell signal, because the sellers are showing me that they're more aggressive. The buyers stepped up here as they did back here, right? But look at what happened when the buyers stepped up here. They almost rallied it back to the median line. Sellers force them back down here to the primary support. Here come the buyers, but wait a minute, the buyers could only rally them this high. What happens? The sellers knock them down again back to the primary support. This was the buyers' last chance to take control of the market. The buyers would have had to take out the sellers, which are hiding right there, but they fail and they come back and the falcon generates a sell signal. Oh, one thing I did forget to address are these mean Renko bars. This is a charting style that's been developed particularly for the DTS system, and I find it invaluable for gauging who has control of the market. It takes all the best attributes of a range style bar like a Renko bar, combines it with the sensitivity of a candlestick, and it really gives you a very good visual of who is in control of the market. And they work, well, like I said, they were designed for DTS. I believe they are an add-on also, or a standalone purchase also. But when Adam first got me to try them, I was a 5-minute chart trader. That's all I'd ever traded was a 5-minute chart. And after working with them for about a week, I would be hard-pressed to go back to a 5-minute chart. They are that good. Yeah, that was a nice little move there. Nice little fall off. Look at what happens, excuse me, look at what happens when you force all the buyers out. Remember, we had buyers here. We have more buyers here and here. Watch what happens when all of a sudden you trip up the buyers. Down she goes. So we've broken this primary support area. Now we're going to look for this reaction, right? We're on the alert for this part and a possible failure and another chance to sell. This whole concept of this breakout and retesting, which is very common support and resistance phenomenon. Right, so we'll put that back on the shelf. And we have high probability signals for all our tools. The trend change signal that we saw, well, actually right here, this was our trend change signal. Our trend line went from green to red. This is our first signal where everything is in sync. Right? We have red bars, red trend line, red filter. And we had very nice follow through on that. Here's a trend change signal to the upside. Trend line goes from red to green. Everything comes into sync. Filter is in sync. Bars are in sync. Trend line is in sync. Very nice follow through. Or at least enough follow through that we hit our high probability profit target. Okay. Same thing that we just looked at, but in reverse. Here's the sellers. Right? Sellers drive the market down. Here come the buyers. Here come the sellers. Here come the buyers. Here's the seller's last chance to take the market back, but what happens is here come the buyers and the Falcon swing trader generates a buy signal. So here is a signal that we could take with greater confidence again. Enter on the hash mark, say we're going to cover on our stops, and Boom, up to our high probability profit target, and look, all of a sudden we get a reaction. You would be amazed how many times we hit our high probability profit targets only to see the market react, and sometimes even change direction. Okay, I know I went over the tools rather quickly today. If you have any questions about them, if there's any markets you'd like to see, I'm just going to make sure I haven't missed anybody's question. Michelle. Michelle is asking, does it work for all futures, the DAX, etc.? Absolutely. Actually, Michelle, it works for anything that you can put on a chart. And it even works, here, let's take a look. It even works, let's say you don't want to use the mean Renko bars. Let's say, you want to trade a 15-minute chart. It will still generate signals. You still get your warning dots, you still get your signals. However, to me, it doesn't look, it's not as easy to interpret. So we got a first micro-macro cross signal right here. It had a little sideways action, but eventually went higher. Had a first micro-macro cross signal back here. Very good follow through in the overnight from the other day. So it works on any chart style as well. But like I said, I believe there's a lot of advantages to using the mean Renko bars. It will work actually on anything but a point and figure chart. It will not work for a point and figure chart. Because point and figure charts are essentially a range style unto their own. And what ends up happening is you end up generating a signal for every single bar on a point and figure chart. I'll try to load the DAX here on my other screen, and we'll see what's going on in the DAX. But here's the euro this morning. Here's the euro on the Eagle. And you can see we had a trend change signal right here. This little mess that we've got going on here, we actually refer to this as a rule of three. This would have been an early heads up that the trend was changing. What happens is when you have in this case, a bullish band, and you generate three sell signals against the band, we normally expect the market to reverse. And that's actually what happened here. This was pretty much a textbook trade. JP says, I came in late. Is this recorded? Yes, it is recorded. And you should see it on the Indicator Warehouse YouTube channel probably in a couple of days. I had a little technical glitch that's put me behind in the posting, but I hope to get caught up in that pretty quick. Okay, here's the DAX. Let's take a look at what's going on in the DAX. Let's start with the swing trade, or pardon me, with the scalper. We had a first micro-macro cross signal here. Actually, for the DAX, I should be looking in the wee hours, because the DAX, of course, trades during the European session, which would be while I'm asleep. Oh, very active. Lots of signals here in the DAX. Okay, just as a for instance, I'm not going to go all the way back, but just as a for instance, this is on our Hawk scalper. Here's our first micro-macro cross signal. Great follow through on that. Never got a macro pullback signal, which seems a little bit odd. With the Hawk, if you have the Hawk tool and you're following it, when you start to see all these yellow bars, that tells you that the market is choppy. It's in consolidation. You probably want to wait it out, but look at what happens when it comes out of that phase. If you're paying attention, notice everything's gone out of sync here. Everything is out of sync. Bars are out of sync. Trend lines are out of sync. Filter is out of sync. But then when everything comes back into sync, there's our first micro-macro cross signal again, our high probability signal. So you could have set up a trade, say, like so, and no problem hitting our first high probability profit target. And then we enter some more choppiness. So the DAX looks like the overnight was pretty active. A little bit of sideways action though. This would have been a little crazy, but still our signals are coming through. First micro-macro cross, hit the profit target. First micro-macro cross, hit the profit target. Here's a red bar buy. This is a Hawk signal I haven't addressed yet, but here's a red bar buy, hit the profit signal. We actually, I have what I refer to as a cheat sheet for the Hawk. And it shows you the 5 basic Hawk signals that you would look for. And they're not difficult to spot. First micro-macro cross, macro pullback, 4-arrow consolidation. It just takes a little bit of time to learn to recognize them. Here's a post 4-arrow consolidation signal and a red bar buy, or its bearish counterpart, the green bar sell. Oh, and I knew somebody was going to ask that. Norm asked, is there a sheet like that for the Raptor? I'm working on it, Norm. And Phil, if you're in the room, don't give me a hard time. Because I've been promising a Falcon cheat sheet for a while, and I haven't had a chance to put it together. It's because we review the signals every day in the room. But yes, there will be a Raptor cheat sheet, as well as one for the Falcon and the Eagle to go along with the Hawk cheat sheet. All right, so it looks like the DAX had a fairly active session, a little bit on the quiet side now, but that would make sense. It's near closing time. Let's see what it did on the Eagle. And here too we had, just a monster move in the DAX. This is odd that it was trying to generate a sell signal here. The Eagle didn't trip a sell signal. That is very unusual. Another reason why we have 3 tools, I guarantee you that even though the Eagle did not generate a sell signal, we did get sell signals on the Hawk and the Falcon. I can guarantee you that. Here's a green bar sell off a hard edge bounce shortly after the London Open. Very strong signal on the Eagle. Again, not one that I've gotten into today. We've primarily concentrated on the signals that are in sync, but this is a signal we refer to as a green bar sell off of the hard edge bounce. So it encounters the hard edge of the trading band, comes out of there, generates a sell signal, even though the bars are still green, and it's showing us that the buyers are about to get run over by the sellers, and that's exactly what happened there. And just quickly, while I have it up, I might as well bring over the Falcon Swing Trader also. And we'll roll back here. Yeah, you can see just a whole lot of trading opportunities here in the DAX, if that is your market of choice. So here was that big sell-off that the Eagle did not signal, but here is a trend change signal, plain as day on the Falcon. And look at that follow-through. Our stop strategy would have held us in all the way down to right there. Fantastic move. My goodness, you could have packed up trading a half an hour into the session. I love it when it does that. All right, we'll put that away for now. But yes, quite literally anything you can plot on a chart. Mike Filigera uses the DTS system to trade the stock market. Omar El-Tuki uses the DTS system to trade Forex. I'm a futures trader, so I concentrate on the futures. Oh, Phil. You are in the room. I should have checked the attendance before I picked on you. Phil says it's been 4.5 years. It hasn't been 4.5 years. Wise guy. All right. Kirk says, no question, just impressive stuff, trying to take it all in. You know, folks, we worked long and hard on these tools, and it's my personal opinion. I've tried a lot of different systems, but it is my personal opinion this is the most complete trading system out there. Michelle asks, is it possible to test the system on my PC? I don't think so. That's part of the reason we do the demo rooms, but I'm not the fellow in charge, so I'm going to shoot you Adam's email address. Any questions that you have related to those types of things, pricing, trials, that sort of stuff, you can ask Adam, but no, I don't think that there's a demo of version available, which is, like I say, why I'm doing this every Wednesday. Mark is asking, can we attend room when you're trading? Again, that's part of the reason for the Wednesday morning room, Mark, is just to show you how the tools are working. What I do in the trading room is a lot of more of the same. By the way, we have a Raptor signal building here. And remember, with the Raptor, your signals are live the moment you place them on your chart. So you want to be careful where you set them. This is what we call a two pullback signal. So we have pullback 1, there's pullback 2. Normally it goes into the hard edge, but we've come out of the Raptor band here, and now we've generated a sell signal. So we'll see whether that has any follow through or not. But to answer your question, Mark, the Wednesday rooms are public. The Monday, Tuesday, Thursday, Friday rooms are for the DTS owners. And now we're into yellow bars, so I'm going to scrub that trade. Okay, a few more questions. I do need to close the room up at the top of the hour. I've got a friend coming over. I've got to give him a hand with something, so I'm sorry. I can't do the room. Sorry about that, folks. I just had a member call me People know they shouldn't phone during trading hours, but it was a member, so I just had to deal with him for just a second. Hans is asking, are there private trading rooms for the Raptor? Well, I try to focus on the Raptor during the owner's trading room also, for those of you who are Raptor owners. And it looks like we're still getting another signal here. Should have taken it right there, but this was our first in-sync signal right here. I'm going to just see whether or not we can get another one off of this reaction. Hans is asking, can you trade there under live guidance? Okay, it's not a trade call room per se. I do try to point out high quality trades to people, like this one right here. But I also spend some time educating you how to use your tools so that you don't rely on me and the trade room all the time. Because quite honestly, folks, running a trade room it's hard work. Oh, poor Eric. No, it is. And for that reason, we normally run the trade room for a couple of months and then we take a month off. So if it's solely a trade call room, that month that I take off, you're kind of in the lurch. So that's why we look at things like this, and I explain to you why this is a more probable signal, why you want to take this trade, why, we look at things like tests of the extreme. Just like you saw this morning, how we were gauging this signal back here, why this signal is a better sell signal. We're looking at things like the market coming down, buyers coming back, sellers coming back, buyers coming back, sellers coming back. So I take time to explain these things to you, and unfortunately sometimes when I'm explaining those things to you, other trades are happening that we're not necessarily taking. Now there are people in the room who are, trading while I'm showing these things, and a lot of times they'll take my trades, sometimes they'll take their own. I'm proud to say that a lot of people in the room report some very good sessions. In fact, sometimes the people are even out trading me. But no, Hans, it's not strictly a trade call room. We tried one of those once and it was a little bit boring, but if there's demand for it, who knows? We might bring one back. Colin asks a good question. How does the system know whether the market is trending or going sideways? Which signal should we take? Great question, Colin. Normally, you can tell, I'll start with the hawk, because the hawk is the most descriptive. When you're getting all these yellow bars coming in so frequently, that's a good sign that the market is choppy. When the filter is breaking up a lot like this, that's telling you the market is choppy. That's usually the time to stay out. Or just to identify the range. A lot of times I'll say, okay, here's our trading range. I'm not interested in doing much with this market until we get outside of this range. So now here we are, we're at the bottom of this range, we're generating a first micro-macro cross signal. Again, I know it's a high probability signal. It looks like we're going to make a break out of the range. This is a trade that I may choose to take. And maybe I'm going to risk it a little bit deeper in case the market's going to give me some sort of bounce and so on. So bar colors are a big tip-off. Filter is a big tip-off. With the Falcon, it's similar. When your trend line starts to look like a roller coaster at Six Flags, it's probably telling you that the market is a little bit on the choppy side. When the filter goes all out of sync, you're probably looking at a market that's lacking direction. The Eagle is a little bit, more forgiving in that respect because it tends to look for trending trades, But here too, you can see the band keeps waffling back and forth. No real commitment. The band can't get any size to it. The filter is just all broken up terribly. We do have this tool. This is also an add-on tool that you can purchase separately. This is called the Trade Forecaster. And the Trade Forecaster attempts to predict what the current market environment is. So at the moment, it says that it's a trend environment. It should remain a trend environment for about another half an hour, after which it's going to change to a swing environment. So probably for the remainder of the morning session, we can expect the market to have some sort of directionality to it, at least according to the Trade Forecaster. Jim is asking about the cost of the software, and I will get you that link. If you follow that link, you can find out all about DTS and the costs involved. And you can also email Adam also if you choose. I did see a question here earlier. Here, Dean asked, which system do you recommend for a small trader? That is a very good question, Dean. And it's not one that's easily answered. Small traders, I always suggest, well, it's kind of a twofold question. You have to know what type of trader you are. And what I mean by that is some people are okay taking profit. Okay, this isn't a signal, but we're going to pretend it is. Some people are okay taking profit, getting in and out, taking your profit, and they're okay if the market takes off like this without them. I'm that kind of person. So for me, the Hawk is a great tool. It allows me to get in, get out. It gives me more than enough trading opportunities. If that is not your cup of tea, then maybe something like the Swing Trader would suit you better as an initial tool, because the Falcon Swing Trader is designed to pick up, a larger trends, larger moves, a little bit more profit. And if that still doesn't suit you, well, then maybe the Eagle Trend Trader would be the way to go. The Raptor, like I say, is a nice compromise of all the tools. It incorporates the best of the Hawk, the Falcon, and the Eagle. Adam would be a good fellow to ask. But quite honestly, I'll shoot you Adam's email address again. Those types of questions, I believe Adam even has what he calls a personality test, which will help you determine which of the tools you may be best or may be best suited for you. Okay, I'm just making sure I haven't missed anyone. Jim's asking, does the complete DTS system include the trade manager? Yes, you can purchase everything as a DTS bundle with all three birds and the trade manager. The Raptor also has a bundle with I believe it comes bundled with the Trailblazer out of the box. But if you would prefer the trade manager also works on the Raptor, and vice versa. The Trailblazer works on the other birds. So you can mix and match. But Adam is the fellow that you would want to talk to about that. He's the guy who makes those types of decisions. And on that note, we're going to button up the room. And if you guys happen to be trading this afternoon, well, the NASDAQ's still looking a little bit on the weak side. but we have filled that huge morning gap that we started the day with. So I don't know if I'd be too aggressive to sell, but don't be at all surprised. We did break this primary support. And what did I say? We might see 4160. Okay, so you heard it here first. If the market reaches 4160 today, I told you it would. All right, you guys. Have yourselves a great day. For you DTS owners,